What's up, everyone? How's it going? Welcome to today's market analysis and trade recap episode. Today is Monday, June the 2nd, 2025, and we took two trades today. One was a winner, and one was break even. So let's dive into the factors that allowed me to take these two trades right here and overview it using Footprint and Bookmap to show you guys what was the reasons for these trades and to provide overall context for the day as well. So let's dive straight into this. So looking at the 30 minutes, just to provide you guys a bit of context to the market, what we said from yesterday regarding our pre-week analysis was that we are preferring that price heads towards the upside, at least towards this liquid level where you have to see reaction again. And we saw that happening, honestly. That's exactly what happened here today. And of course, we had a zone above. If we broke this upper liquidity level, we expect long-term movement up till there. We're not expecting us, if you break this with strength, to come back all the way down to here. But if we did, in some case, head towards the bottom, we would have been able to succeed from there as well. But right at market open, what we saw happening actually was that price started heading towards the downside. And that was interesting because our bias was upwards for the day, simply regarding our preferable predictable outcomes, but we saw price heading downwards. But until 9 a.m., we did have news that we had to wait a news 5-minute interval until 9 a.m. So we are flat until 9:05 a.m. And right at that time, we swept a lower standard liquidity, got near this liquidity as well, and we wicked up really nicely. And as you can see here on Bookmap, from this sweep, we are generating very bullish distribution of liquidity within the book. So on Bookmap, you see clear uptrend of lower support barriers and movement upwards and breakage of resistance barriers. So there's that. And honestly, that's pretty much all the context we had to need. If we were to happen to break this and continue, we would have looked for retracement, continue, and strive to look for the next level if that lines up with what Bookmap is saying. But to our predictions, we use this as fuel to continue heading towards the upside. And that's how the context was here on ES. On NQ, it was essentially the same thing, but what we saw happening was that right at market open, we started heading towards the upside, which did happen on ES. We did start heading upwards, but then we started shifting towards the downside. And because of that, we swept these two liquidity levels that were higher. And after the sweep of those levels, we headed back towards the downside. Now, if you look at a 1 hour, we might potentially be at a level on NQ, but no, we're not. But we are on a level here at ES, which did see such good price action regarding the wick, which provided pretty high confidence that this may actually be an area of reversal, and we may head upwards and see what we can do there. Now, right at market open, just to symbolize again, we swept this key level, continued heading upwards, and then from here, we started heading down again. But that's all during that news interval time, so we don't want to mess around too much with news released at the specific times, especially when we're trading using Orderflow. But as you can see here, we started making that move down. Right here was where we swept that lower liquidity on ES. And then we put a leg up, buyer support barrier started showing up, and this 5920 area started generating itself as a key target or level. Same with around 5905, 5910 levels. So these three levels, I'm definitely looking out for key targets for price to potentially head up to, because this has 100 contracts significant, this has 60, and it's okay, and this has around 86, which could be determined as significant. But this one has been extended for a long time, marking as significant. Now, we saw price continuing to enter, but really we want a clear and identifiable target, right? And it's hard to exactly tell where that target is at the moment, because from where it looks right now, it looks like the target is at 5870. So there is that. But as we continue, we see that price actually sweeps this resistance barrier with a lot of strength, as you can see here. And on the footprint, you see large amounts of buying activity here at these highs, aligning with that breakage of the highs there. Now, we broke this resistance barrier. We saw buyer absorption. Now we're heading back down. Does this necessarily mean that we're going to head all the way down? Not at all. In this case, we went down and came to a support barrier. And because this breakthrough, although it was absorbed, it removed that resistance barrier out of the market. So now if we start to reject from this support barrier, we can head upwards until 5900 and 5905. But looking at how 5905 is looking, it has distributed and larger strength, volume, and a target than 5900, because 5900 looks kind of measly compared to 5905. Typically, when there's such of a big contrast, you target the one that is the most significant. So that's what we're looking for. We're looking for how price reacts at this support barrier, and if we're seeing ideal support, we can enter it. Today, we did not take this iceberg as a catalyst, but in reality, we definitely could have, as this would have been significant information. But as you can see, we started to reject from that lower barrier, and as we started to reject on Bookmap on a lower time frame, what we started seeing here are aggressive buying delta just getting spread throughout, starting to push the price upwards. That provided me enough confidence to enter longs within this area, putting my stop below the support barrier, or around the support barrier around 5887, positioning myself to target that 5905 area, which we underestimate and put 5904 in order to not get edged with the tick. And honestly, played out exactly how we wanted within less than 5 minutes. So it was a pretty good trade with no drawdown whatsoever, maybe 5 ticks, nothing too significant at all, and played out just like we wanted it to. Here at the top, buyers and sellers are having a battle, as demonstrated by this high volume in buying and selling delta divergence. And that's where we placed our exit, which played out absolutely perfectly, as you can see here. Now, as we continue within the market, there was really nothing to be shown there. As we kept going up, these buyer support barriers headed up with price as well. So realistically, we could have managed our trade and moved our stop around this area continuously, even until that 5897 area. So if we underestimate 5986 or 5896, we could have moved our stop till there, which would have kept our stop in profit at least 12 ticks. So guaranteed 12 ticks of profit. Who doesn't want to take that? And that's the beauty of risk management and active risk management. So definitely something that I noticed now, which hopefully we can implement in the future potentially. Now, from there, price continued to head towards the upside, taking out 5910 level and even 5915 level if there was one. And let's see how price reacts and use footprint bookmap to do so. And on NQ, nothing told us otherwise in terms of price action. So from what we saw in the charts, it aligned with ES. But here, simply as we keep moving forward, we see at this point that liquidity is compressing within each other. And typically when that occurs, we're waiting for a breakout. And here we broke out towards the upside, came down. Now buyer support is moving upwards again, but now seller support is also moving. So now we're condensing again at 938. So in this candle. And it's surprising that at that condensed moment, that price started to make a small leg down towards the downside. Now, we came down and we saw something interesting at that 930 area. And we actually had that marked out here for us to review in today's video. So taking a look at what happened there, you can simply just see the significance, because from what I see happening here at this area, tell me what you see and notice about these lows right here. You notice anything? We see a large amount of volume is occurring near these lows. And what do we notice about the volume? It's primarily selling volume, which is not moving the price lower. And that is identifying seller absorption, which potentially could have provided a long entry here targeting 5910, but that would not have worked out simply because of the sheer size of this barrier. The idea and understanding of this absorption is nonetheless important though. As you can see here, we kept compressing and heading towards the upside until finally a breakout up until 5920 area where we saw our next barrier. Now here we came down again. Simply this is just a game between barriers here today. We came down again, pushed the leg down. We swept this area. Nothing there to really support the upside. So we continue towards the downside after breakage of this barrier with aggressive selling. As you can see here, you're seeing distributed selling with large delta in high volume area, pushing price downwards. And then here is where things start to get interesting, providing us for our next trade entry later on. But let's take a look at what's going on. We took an upper barrier. Yes, and now honestly, volume is not that high anymore. We're not seeing those buyer barriers here at every single low like we saw previously. So not too much confluence here. The only thing is that targets are towards the upside. So it wouldn't be unfavorable to see continuation towards the upside until 5920. But as you see, after a sweep of this 5915 levels, a very, very aggressive seller came into the market and pushed price downwards. And that is symbolized by this candle right here on the footprint chart. You can see the sheer amount of volume executed throughout this trade, 18K as compared to the previous candle's 10K. And we came down very aggressively when it comes to selling. Now, at this area, we saw price didn't break through this area again and continued going lower. We started heading back towards the upside. Targets were up again. So if we find a retracement with a decent catalyst, we're planning to enter longs. But here at this area, we saw this aggressive selling come in. Now, you may be wondering why we entered long there. Well, taking a look at what happens next, right after the seller had come in and put us into a decent value area for entry. It put us in perhaps a discount in terms of price, and an aggressive buyer came in like such. When this aggressive buyer came in, that I believed was a confluence or catalyst that longs were going to come in and take out 5920. And that was essentially our idea and basis on this trade. And the support for that basis was essentially just the fact that this was there. Now, we did not have any support barrier or anything preventing us from continuing down. The only thing is that there are no targets towards the downside, but I want to see something preventing us from continuing down so that it makes sense for price to continue up, going up completely. At this area, I mean, the overall idea was not bad, but what would have made it more reasonable to enter was simply if we had more barriers here towards the downside. If that was the case, perfect and great entry model. But since there was no barriers here towards the downside, it potentially should have been a flat day, and that's definitely something we strive to improve on. Even though we had decent catalyst, no barrier for us to work with. We never knew and we never know how much price is going to head down before coming up to sweep this liquidity. And that's the main reason we should have stayed flat. Now, we entered and we kept our stop below this 5905 area, below this wick, simply because that's where we previously saw decent volume, but there's volume there as well, so keep that in mind as well. And as you can see, we would have actually gotten stopped out if we held the trade, but we exited for break even, and the reason that we exited for break even was simply by taking a look at this candle. Next candle onwards, it went in our way pretty nicely, putting us around 19 ticks in profit, right? But then in the next candle, we started coming down again with decent seller aggression, and the fact that the seller aggression was coming in was not something I liked to see. And because that seller aggression was coming in and volume was decreasing in the entire day, as you can see, previously we had 27K volume. We're above that 18 to 20K volume mark that made New York session actually tradable. But here we're seeing 9K and we're seeing 9K candles, 10K candles. That's really low volume that we don't want to trade with. And here we saw aggressive selling come in with a decent amount of aggression, and we don't know how much further price may head. Even with the volume that we've seen here, it's truly hard to predict. So we exited and cut out that trade for break even, which honestly wasn't a bad idea. Realistically, this should have been a flat trade simply because of the context that we provided before, that being that we don't know how much lower it will go before heading back up, and because of that we should have stayed flat. But as you can see, our idea was right. We did see a retracement and continuation upwards, taking that 5920 area quite exactly, which shows the true power of bookmap analysis and order flow, because as you can see, we come down, and where's the leg down? You'll see here, look where we come down to. We come down to a bookmap barrier where we see heavy selling come in, and I want to see how this looks, and we can analyze this as well. But as you're seeing here at this area, we're seeing large volume near the downside. Volume is here, especially at this 1025 candle. So much volume here as well, so much volume here as well, so much volume. Price is fighting between buyers and sellers at that area. Sellers have tried to come in previously, cannot break through. Sellers have tried with distribution as well, could not break through. Buyers are popping in. Sellers are trying to defend. They're unable to defend. Now price has broken. And now here, since there is really nothing stopping us from the upside from there, it's honestly a pretty nice entry, getting all the way to 5920. So right here could have potentially created for one of the best trades of the day, but it's completely out of our trading session, so we're flat. But honestly, this is a very, very good entry model. We saw absorption here at the lows. After retracement, we start seeing buying aggression come in and come in with a decent amount of strength as well, breaking above this struggle and fight between buyers and sellers, and there's nothing preventing us from heading upwards until our actual target. So say we enter really late around 5910. That's pretty late entry, but realistically we likely would have entered somewhere around here where we saw that breakage occur, so around 5908. If we had entered around 5908 right here, 5908 right here, we'd have kept our stop around 5900, which is there, and our TP would be right at 5919, following that 1 point rule. And as you can see, worked out really nicely. Approximately 1.4 risk to reward ratio. If you start seeing barriers supporting us, we can move our stop up. But in reality, this was just a pretty quick move towards the upside, TP hit. So this trade would have provided for a great setup here today. And this was a very high evidence where order flow would have provided the highest edge in that trade. Order flow also provided us the edge in the overall context of the market that did allow us to succeed. But honestly, that's all I got here for today. I'll see you guys later today for the pre-day analysis. But if you have any questions regarding what I've discussed here today, feel free to leave a comment down below. I'll make sure to answer your questions there. Or please go ahead and join the Discord server. The link is in the description down below. Everything is completely free, and you may gain a thing or two out of it. So I highly recommend you guys to join. Now, if you want to take advantage of footprint tools and bookmap tools like I've used, you can take advantage of the live bookmap live streams and free 15-minute delayed footprint using the links in the description down below. If you want to upgrade to live footprint, that is the paid plan, but 15-minute is great for practice, so I highly recommend you guys to check it out as well. Everything is completely free in the link in the description unless you yourself obliged to pay. But that's all I have here for today, and I'll see you guys later today for the pre-day analysis video. And I'll see you guys tomorrow for the market analysis video and the pre-day video tomorrow as well after that. So I guess I'll see you guys then. Goodbye.